My name's Alex Wilson. We have Kyle DeVigi beside me. We'll get into more direct introductions on the presentation, which I guess I should just start now. So let me share my screen. Basically, we're doing a presentation on why we're investing in Calgary. I've bought in multiple projects there. Kyle has recently invested in Calgary, and we see lots of opportunity there. So myself, my name's Alex Wilson, owner and broker of record for Remaxwealthbuilers Real Estate. I've been selling real estate in Toronto for over 11 years. Number one agent in Ontario for individual transactions in 2019, number 25 in Canada, and number 80 worldwide. I was inducted in the Remax Hall of Fame and awarded the Lifetime Achievement Award at 35, but none of that matters. Not relevant to this presentation. What does matter to you is that I turned an initial deposit of $39,300 into a $14 million real estate portfolio that includes 14 condos, a High Park triplex, which my family lives in, and an apartment building in Hamilton. And this project that I invested in, Kyle invested in the same project, and we're kind of all going along the same journey. So let me introduce Kyle.
Yeah. Hi, everyone. So my name is Kyle DeVigi. I'm a licensed sales representative. I've been investing in real estate since about 2012, and I've been able to grow my portfolio from that first property where Alex and I invested in the same development into 6 properties now. And I previously used to manage Lotto 649 and Lotto Max draws. So the actual ball draw is what I was responsible for doing. But when I was doing that, I couldn't believe that almost 40% of people were depending on winning the lottery in order to fund their retirement. This was mind-blowing to me and something that I didn't want to see people gambling their future on. So a little over 2 years ago, Alex and I founded Remax Wealth Builders, where we wanted to teach people how to invest in real estate and to really take control of their future and start to build their own pension plans by investing in real estate.
And that's what we're going to start off with today. So it's kind of like why we're doing all this, right? And I have a young family. And over the years, I said, buy real estate. It's going to be worth more money in the future. So that's this slide, which you look at any of my stuff in the past. You've seen this slide. So real estate's a beautiful thing. There's no instant gratification in real estate, but over a long period of time, it can build substantial wealth. So if we look at my current portfolio and then what it's going to be worth in 30 years, it'll be worth $36 million. And the beautiful thing about that is that there's been a tenant in all these properties paying down the mortgage on all these properties. So I will own all these properties myself with no mortgages in 30 years. And because my background's in economics and finance, I'm like, well, what's the purchasing power in today's dollars in the future? So what I mean by that is I know that $36 million won't be equivalent of $36 million today. So the equivalent in that when I take in inflation is nearly $21 million. And the beauty of this is that these small actions of buying one property, 2 property, growing into what it is now, the small actions of having people live in these properties pays down all these properties. And then by just sitting here with the occasional maintenance requests, but basically by sitting here, I've accumulated this without really doing much instead of just the initial transaction. So when I looked at it further, I'm like, well, what's $21 million? What's $36 million? I'm more thinking like, well, when can I retire? What cash flow will this be? What is this going to provide me on a yearly basis? So then I took a deeper dive and I said, well, what if I looked at this like it was a pension fund and I put a 5% ROI on this. So if I want to get a 5% return on investment on the $21 million portfolio, so that is in today's purchasing power, that'll generate me over $1 million per year. Now you want to reinvest some of that to protect against inflation. That means I'd have $624,000 to live off of in 30 years. And to put this in perspective, Kyle and I both turned 40 this year. So at age 70, we would have this large portfolio that would generate that income in today's purchasing power. I'm like, I was mind blown. I'm like, oh my God, that's a crazy amount of money. That's a crazy amount of money. I don't need that much money when I'm 70 years old. But it was a really great tool for me to wrap my head around why I'm doing all of this. And it allows me to better manage my portfolio because, again, I don't need $1 million per year. And 5% is a conservative ROI on an investment portfolio. So I don't need that much, but it shows you why you're doing that. And you may be thinking they were like, Alex, like I can't build a $14 million portfolio. Answer is yes, you can. You know, I always tell everyone in these presentations, nothing special about Kyle and I. I'm from a town called Cape Real, 45 minutes north of Sudbury. And Kyle is from the big city of Sudbury. We met in high school. Nothing special about us, except he has 2 degrees. I only have 1. But we broke it down in the slide to show, well, if you have $1 million real estate portfolio, well, in 30 years, what's the value of that in today's purchasing power? And what income could you generate off of that on a yearly basis? And then the recommended yearly payout. So if you have $1 million in real estate today, that'll give you an income of $42,000 after inflation adjustment in 30 years. Or if you don't want to protect against the inflation, then you can take $70,000 per year. 2 million, 140, 80, then 84,000 goes up and up and up. These are realistic little baby steps that you can make, which will secure your financial future and then also your future generations if you choose to pass this along to them. So it is a really valuable tool over time that can build substantial wealth and substantial cash flow. So that's why we jump into Wise Calgary. So we talk about that so you understand, well, why do all this? You know, we're not about making short-term money. We're all about long-term money. And when Kyle and I bought in the Carnaby, which is our first condo in 2012, it was at a similar price point to what Calgary is today. And I can't get you those opportunities in GTA. I can't even get them in Southern Ontario anymore, Southwestern Ontario. Like I go to second or third tier cities. I can't get these opportunities like that in the GTA. So that's what kind of turned my attention in 2019 to Calgary, when I first bought my first investment condo there. I'm like, well, man, this looks really affordable. You know, condos starting, depending on the project, low 200s, mid 200s, 300s, 400s. If I'm in the downtown core, I'm looking at high 200s, low 300s. I'm like, I can't get that in downtown Toronto. It's double that price. And these units cash flow. So I started digging some more into Calgary. I'm like, well, should I put my money there? I always read in the headlines, bad, but let's find out what's really going on. So it's the number 1 most livable city in North America for the last 2 consecutive years. The 4th most livable city in the world, top 5 on the Economist Intelligent Unit's Global Ability to Livable Index for 10 consecutive years. It's located in the foothills of the Canadian Rockies, loads of green space, and the 2nd lowest cost of living of Canadian cities and the 9th lowest in North America. So when I look at this slide, I'm just like, a lot of positive things going for Calgary. Don't read about that in the paper. Then I look at what nature has to offer. So we look at sunniest city in Canada with 2,300 sun-filled hours a year. Most extensive outdoor path network in regards to getting around the city in regards to biking trails, and ranked the second for the healthiest lifestyle. So I'm like, it looked like a great place to live. And then also when I look at it in COVID and post-COVID times where people are really looking at, where do I want to live? Do I need to live where I live? Well, what are some of the factors they're looking for? They're looking for a lower cost of living. They're looking for access to outdoor and amenity safe, and they're looking for a healthier lifestyle. And I'm looking at Calgary, I'm like, this offers all of this. And then when you look outside of the city, that's where we get into the Banff National Park, world renowned. People come from all over the world to Banff. 5 world-class ski resorts within 2 hours of Calgary, over 200 hiking trails in Banff National Park, and only an hour and a half drive to get to the park. And it's a real hour and a half drive. It's not like, I'm going to say it's 2 hours to Muskoka, but you got to leave at 4 a.m. It doesn't have the traffic constraints that Toronto does. So you can actually get to this amazing outdoor playground within an hour and a half. So all those things were great. I'm like, looks like a great place to live. So let's dig down deeper. Where's the opportunity? Again, we read these negative headlines, but let's dig deeper. Is there some positive economic data which will drive the price in Calgary? The net population growth, that I actually had to fix this slide. It was actually 29,000 people in 2020. So the city grew by 29,000, but the population is growing on in the present day, and in the past, it's been growing year after year. So when you look at what we're investing in roofs overhead. So we're investing in roofs overheads. We need to know that the population is growing. If we have a growing population, that means they need more roofs, and that means when supply and demand get out of whack, we'll see positive appreciation of these properties, and we'll see increases in rents. They also have money out there. Calgary has the highest per capita millionaires of all the major Canadian cities. And Calgary also makes the most money in wages and salaries. So the average Calgarian makes more money than any other city in Canada, with $66,000 in 2018. So you have the household wealth based in Calgary as well. But then when we look out to the future, this is where things really start getting exciting. So when we looked at population growth charts, and this is from Statistics Canada, Alberta is going to have double the growth rate of Ontario. So it's going to grow by 48% over the next 22 years versus 24% in Ontario. And when I looked at Alberta's growth compared to British Columbia, which Alberta right now, it's I believe it's 400,000 less than British Columbia. 600,000, currently 600,000 less people in Alberta than British Columbia. That is going to have a net difference in 22 years by 1 million people, where it'll go to over 400,000 more people than in British Columbia. So we're going to see Alberta's going to lead Canada in population growth, double the population growth rate of Ontario, and then its neighboring province is going to have a net growth of over 1 million people compared to British Columbia. When I looked at that, I got really excited. I'm like, oh my God, like there's going to be lots of people moving to Alberta. And then what's the economic capital of Alberta? Well, it's Calgary. So when I looked at GDP, so the economic output of cities and provinces across Canada, here are your big three: Toronto, Montreal, Vancouver. What's number 4? It's Calgary. And Calgary's economic output is greater than the province of Saskatchewan. It's greater than the province of Manitoba. So there's significant economic output that occurs in the Calgary region. So we're now looking at okay, it's a population growth center, and it has a substantial economy in Calgary. There is going to be great growth opportunities out there. And when I look at just our initial analysis, I also piggyback on some people. So the projects we typically promote in Calgary are built by Minto. Minto is one of the largest builders in Canada. They're based out of Ottawa and Toronto, been around for 60 plus years. They have over 1,100 employees. They have over $4.1 billion of assets under management. They're publicly traded on the stock exchange. The founding family, the Greenbergs, are on Canada's top 100 wealthiest families list. They're worth over $1.5 billion. Why I say all these big numbers is that this builder is going to be around no matter what. They've been around for 60 years. They care about the reputation. They also, starting in Ottawa and then moving to Toronto and then also operating in Florida, Calgary's been the latest market they've entered into. So they want to leave a good impression as they set their brand up in Calgary. So yes, they want to do some great product out there. And then finally, they have 1,100 employees and they're making hundreds of millions of dollars of investments in the Calgary market. They see something out there and they started investing in Calgary. And I don't have a whole team, or Kyle doesn't have a whole team of analysts behind us, but they do. And they're also publicly traded on the stock exchange. So they face scrutiny in regards to the transactions they make, and they get punished if they make poor transactions. I'm like, okay, they really did their homework. So if they're investing out there and they left Ontario and are starting to invest in Alberta, they probably see some very positive signs. So maybe I should be investing out there too. And why are they? Well, buy low, sell high. That's what you're looking at. So now I put this Warren Buffett slide on here for two reasons. Number one, the mantra of you buy when markets are low and you sell when markets are high. So to reinforce that mantra, but also to show that he recently, this was last year, he had bought a pipeline. So it was his first investment in oil and gas in over 10 years, a $9.7 billion investment in pipelines. So we show that to show you there is a positivity on the oil and gas, but also I added the line, new condo sales prices have dropped 21% since 2017. That's exciting to me because I didn't buy a new condo in 2017 in Calgary. I'm buying new condos in 2019 and 2020 and 2021. So I'm looking at it like, hey, the market is soft right now. This is a great time for me to be buying. This is when I want to buy. If the economic data that shows population growth, which shows we're going to get into more economic stats, but it is the fourth largest economic city in Canada. When I look at those stats and combine that with a low market, that's where we see some valuable opportunity for those to go up in the future. And a lot of the messaging I get from people are like, well, what about Keystone? It canceled. Keystone doesn't matter. So why Keystone doesn't matter is that Keystone was already canceled in 2015. And when you look at Keystone, Keystone was only going to provide oil to the American market. And the American market is already our biggest customer. The American market isn't what's going to drive Canadian oil prices up. When you read about the price of oil, they're not talking about the price of Canadian oil. They're talking about the worldwide price of oil. And our oil sells at a discount. The reason our oil sells at a discount versus the worldwide price is there's a distribution issue. So it's not the worldwide oil price that impacts us. It's the distribution that impacts us. And why there's a distribution issue is because Alberta is located in the middle of Canada. You can't easily get the oil out to other markets. And right now, the majority of oil goes to the United States, 3.8 million barrels in 2020, a record level to be exact, went to the US. And the issue is that they're our largest customer. So we need to diversify our markets. So the Keystone, which was already canceled in 2015, our capacity for oil is 4 million barrels to the US. Currently, we did 3.8 in 2020. That's expected to peak between 4.2 to 4.5 in 2025. Well, because it was originally canceled in 2015, other pipelines started increasing their capacity to make up for for that loss of the pipeline in 2015, the Keystone. So they started expanding their capacity. So we'll actually have the capacity coming online to meet the demand of the U.S. market going into 2025. The Keystone would have just been excess capacity. The capacity wasn't needed. What is needed is capacity to bring the oil to international markets. The pipeline that does matter is the Trans Mountain Pipeline, and the Trans Mountain Pipeline, which is under construction, which is all on Canadian soil, and which all of us as Canadians own. This is our strategic importance to our federal government. That's why they purchased a pipeline, and that's why they're making sure the pipeline goes through. And that pipeline goes to Vancouver, and then that pipeline will allow us to export the oil to international markets. That will drive up the price of Canadian oil, which will be good for the nation, and it will be good for all Canadians, and it will be good for Alberta, and it'll be good for Calgarians as well. And on top of that, when we looked at the increasing of the doubling or the tripling of the line of the Trans Mountain, they're going to triple their capacity. They're actually going to increase oil output by 14%. So that act alone will increase 14% the oil distribution in Canada. So that's the one you care about. And that one's finishing in 2023. And that's going to be a big boon to the Calgary economy, Alberta economy, and the national economy. Anything you want to add on that, Kyle, or did I really cover everything there? I get really excited.
Yeah, you're definitely passionate about this. I love it.
Yeah. So I get tested on it all the time. People are like, what about Keystone? I'm like, doesn't matter. It's already canceled. anything I say here, anyone can do the research on, because it's the research that I've done. So the capacity on the Keystone was just going to be excess capacity. Distribution and diversification. So we talked about distribution. Distribution of the oil will be improved with the completion of the Trans Mountain Pipeline. But let's also talk about the diversification. So we talk about oil and gas because we have to talk about oil and gas because with Calgary, but people have to change their mindset. Oil and gas is now the backbone of the Alberta and the Calgarian economy. It's not going to be the driver of that economy. But the beauty of this backbone is that it built the current infrastructure of this first tier city, this world-renowned city. And all of the office buildings in downtown Calgary were built on the premise that oil was going to be at $100, which it is not, and probably won't hit that level again. But what this has created, it's created 27% vacancy in the office space in Calgary. And that may seem bad to people, but this is fantastic because what it allows to happen is a diversification of the economy. Now, Kyle and I are both from Sudbury, which I mentioned. And Sudbury was also a commodity-based city. It's the largest nickel producer in the world, and mining is the main category that is involved with. And it used to live and die by the price of nickel, ups and downs, big swings. That no longer is the case. So Kyle, why don't you talk a little more about why Sudbury doesn't rely on the price of nickel anymore?
Well, because it's really grown past nickel and the mining industry where you're taking actual ore metal out of the ground. And it's expanded more into the knowledge-based environment. So number one, they are still heavily involved in mining, but it's more techniques, it's building equipment, it's the surrounding and supporting services around mining, not the actual digging in the ground. And expanding on the knowledge sector is Sudbury is really now known for education. It's really the center of education in Northern Ontario. You have university, you have Cambrian College, you have the French College there. So they've really diversified away from mining into these well-paying education jobs, tech type positions and professions as well. And we see very similar thing happening in the Calgary market too.
Yeah, and that's where it comes down to. So on the energy side, we all need energy. And Calgary is the leader in energy production. It doesn't mean it needs to be oil. There are a lot of things that come with energy production. So they become the experts of that. And the shedding of jobs already happened. That happened a while ago. You will see job losses still in the oil and gas sector, but the major shedding of jobs already happened. And now we're in the recovery sector of the economy. So you have this backbone that built this amazing downtown infrastructure in Calgary. But because of high vacancy rates, you have low-cost office space. Now, Calgary is ranked in the global top 10 most attractive cities for workers. Great place to work if you're a worker. Calgary also has the highest proportion of STEM graduates of major Canadian cities, degree in programs in science, technology, engineering, mathematics. So you have a very, very well-educated workforce. And you also have the youngest workforce in Canada. Why does that matter? Well, who's going to go into that low-cost office space? Well, Calgary, believe it or not, is now starting to have a booming tech sector. And we're going to show you examples of that next, and very, very exciting stuff. So Calgary is home to 435 technology companies. 3/4 of these are startups. There are more than 2,000 open tech jobs in the city and a record 44,500 Calgarians working in tech right now. So when we look at the low cost, so if I'm a startup, which makes up 75% of the tech companies in Calgary, my cost base matters. And when I look at the cost base versus Edmonton, it's 23% less than Edmonton. It's 102% less than Toronto, and it's 155% less than Vancouver. So Calgary becomes your low-cost environment to start your tech company. And it's already booming because this has been happening for a few years already. And what has happened? Well, now they're starting to hit unicorn status. So these startup companies are hitting unicorn status, which means they receive billion-dollar plus valuations. You don't read about this in the newspaper, these success stories in the Calgary market, because you're overwhelmed by oil and gas, but you have a massive diversification happening away from oil and gas. So Benevity, if you look at the date on this, December 4th, 2020, just sold a major stake of their company. They reached a $1.1 billion valuation. And actually, and Kyle, I didn't know this, but I just sold a unit to a local Calgary investor, And I didn't realize Benevity's head office is right around the corner from Era. Era is the current project that we are selling in Calgary. And that was a big surprise to me. I didn't know it. I didn't look at the exact location of where these head offices are. But you have a $1 billion valuation in this company. And then what happens with this? Well, there's been other unicorn deals as well in the past. You have Solium Capital, which sold to Morgan Stanley for $1.1 billion in 2019, as well as a $1 billion deal with Calgary-based medical research firm, Parvus Therapeutics. That was bought by a San Francisco-based by biotechnology company. So you have these unicorn companies establishing themselves in in Calgary. So what happens next? Well, other venture capitalists or other people that are looking to invest in these companies, they start seeing these success stories coming out of the city, and they're like, well, what's going on in Calgary? Something seems to be special happening there. People are making money. I want to make money. I'm going to start investing in these companies. So you start to have this spiraling effect in the positive way that, okay, this is the new hotbed. This is where the new big players are going to come. And then what you also have is you have the original people that invest in these companies and the co-founders of these companies. They're getting massive payouts, and now they have to reinvest their capital somewhere. Well, where are they going to invest it? Well, they know that their friends have startup companies, and they're like, hey man, this company is about to take off. They're working on some good stuff, so they reinvest their capital in the startup market in Calgary, and it starts growing and growing and growing. And just last week there was an article. Let me bring it up. If you guys give me a second here, Kyle, I'll let you talk while I find this article because I didn't set myself up for it before the presentation.
Oh, well, that's where it gets really exciting, is because the effect really starts to snowball. Like you mentioned, once the money starts coming in, people start seeing success, then that attracts more and more people. And then all of a sudden, we have a great burgeoning tech sector here. And I know, Alex, you have slides that are going to cover this more, but really the success attracts even more success and more money. And that's where it really starts to grow exponentially. So we're really at the cusp here in Calgary. We've been able to show some great success with a few of these unicorns that have already been very successful and have started to cash out. And now it's where we're going to start taking that kind of quantum leap forward for the entire tech sector. And, that's why I personally invested, is I see huge things coming for Calgary, really becoming kind of the Silicon Valley of the West. So, I think it's a great opportunity here.
Great. So here we go. Here's one. This was last week. And it's going to come up. It's going to come in the slide. So the Globe and Mail, Calgary startup Simend raises $43 million, hires hundreds, brings hope of tech revival to depressed oil patch. This was just last week, February 9th. There you go on the article. So they've had success. They're growing. This article will be in the recap email that we send out to everyone. So when I go over, I'm going to stop the share on this right here and go back to the presentation, because when I go to the presentation, so Calgary Tech Company growth. So this presentation, for the most part, was put together in December, beginning of January. It was actually beginning of January this year. That article just coming out in February 9th. So I had Simend on my thing. So Calgary Tech Company growth had fewer than 20 employees in spring of 2019. Today has more than 200. They're moving into 79,000 square feet of office space, looking to hire an additional 200, 300 people in 2021. So when I saw that article last week, I'm like, oh my God, look at this. I said, this is happening with the company. And there it is, showing the success story. receiving their funding. Halcyon, another company, they outgrew their industrial space. They're moving downtown. They went from 3 staff 5 years ago to 68 employees now 150 employees by the end of 2021. They just signed a lease for 20,000 square feet in the Millennium Tower in downtown Calgary. So again, with this infusion of capital, with these startups receiving more and more capital, more and more recognition, they're able to hire more and more employees and grow their companies. And what do these employees need? They need roofs over their heads. And these are all well-paying jobs. You have LodgeLink will require 300 new technology jobs based over the next 5 years in Calgary, will require an additional 50,000 square feet of office space in Calgary. As we said, Toronto office space 100% more, over 100% more than Calgary. Vancouver 155% more. And it's also getting worldwide recognition as a place for companies to establish themselves, startup companies. So ESQ's new Canadian subsidiary called CloudXI Technology, they looked at various locations in Canada, and they chose Calgary as their place to open up office space. So here's the thing, and I recently made this analogy in past webinars. So guys, I bought silver. I got caught up in the Reddit thing. I bought silver, and it immediately went down 10% after I bought it. And it was interesting. I was listening to the radio later that day, and someone giving their advice on it, going, "Yeah, once you hear about these things, it's already too late." And I'm like, "Yeah, lost my 10% immediately." And why it was immediately, I set the trade before the markets opened up, and it's what happens. So that's what's happening here. You're not reading. You're starting to see positive articles in the Globe and Mail in various publications, but it's not hitting the frontline headlines yet. But just looking, so we've been doing this since 2019. So in 2019, when we sold the first project in Calgary, everyone was from Ontario that bought, no locals. Everyone was from Ontario. This project here, I have 3 Calgarians buying, and I have people from BC buying. I had none of those in 2019. So now I have locals buying, which I thought was amazing. So locals are recognizing what's happening. The majority don't. I will say that the majority don't. But but before it was zero. Now I have locals starting to notice, and I have people from BC starting to notice the value that Calgary has to offer, because they know how expensive their city is. And Vancouver and Calgary are not that far apart. You could drive to Calgary from Vancouver. So that was a really interesting sign for me, looking at the demographics of the buyers that are now investing in Calgary and the inquiries we're getting from various parties. So that brings me to my next slide. How do I know that there's going to be more companies coming to Calgary, even beyond their startups? Well, it's already happening somewhere else. So companies are leaving Silicon Valley and moving to Texas. And when I look at that situation, I see very similar things with Alberta. So why are companies leaving California? Well, they're fleeing high taxes, first of all. Well, Alberta has the lowest corporate tax rate in Canada. They also have no land transfer tax or development charges for real estate investment, and there's no provincial sales tax. So from a corporation perspective, Calgary and Alberta end up being the lowest cost tax environment in Canada. Expensive housing. So we mentioned that Calgary has the second lowest cost of housing for all major Canadian cities, and ninth lowest in North America. Well, they have incredibly affordable housing, especially when you compare it to Vancouver and Toronto, and now Montreal, because we've seen a big run up in pricing in Montreal and Ottawa too. So they have incredibly affordable housing. Okay. And then government regulation. There's been a $10 billion stimulus package signed by the Alberta government to jumpstart the economy post-COVID, which is already in effect. They've already reduced their corporate tax rate. It was the first thing they did. They jumped the gun. They're like, this is what we're going to focus on. We're going to focus on economic recovery. So when I look at those 1, 2, 3 things, I'm like, well, that's why people are leaving California to go to Texas. I see the exact same thing that's going to happen in Canada. So I said this, and then it happened. then it happened. Don't worry, guys. I'm more set up this time for the screen share. So we said this in January. Then 2 weeks ago, there was this. Tech firm moves headquarters to Calgary from BC, another sign of the city's future growth. I'm like, oh my God. Like we were just talking about this. This slide came 2 weeks after. This came 2 weeks after that when we put that slide together. So Vancouver-based mCloud Technology Company, a corp which uses artificial technology, cloud computing, and sensors to monitor and improve the efficiency of energy-intensive assets from commercial buildings to oil and gas facilities, will announce Tuesday it signed a memorandum of understanding with Invest Alberta to relocate its head office to Calgary. That is big. That is massive. So will Amazon, will Microsoft, will Google, will those companies move their Canadian head offices to Calgary from Vancouver or Toronto? No, that's not going to happen. But what you'll have these startup companies, you'll have these mid-sized companies, you'll have these other international companies which are smaller, which will be looking at, like, Calgary looks like a great environment for us to operate out of. It's a low-cost environment. It offers a great city for our employees to live in. You know, we should bring our office space there. Why are we operating in these high-cost cities? So we see that occurring as well in the Calgary market. And I'm going to jump Kyle back in again because he has a real-life example of himself, not for the Calgary per se, but in regards to looking for low-cost environments. So Kyle, where does your wife work?
She works for a large pharmaceutical company in Mississauga.
And she's in charge of global regulation now. But her previous role was she worked with the FDA to get drugs approved. Where was she based out of?
Their office was based out of San Francisco.
But she worked out of?
Mississauga.
Because?
Low cost environment. You know, you can attract high level, top quality workers, highly educated, but you're only paying them a fraction of the amount. It's still a good salary in Canada, but it's a fraction of what they're paying in Silicon Valley. Housing prices are a fraction of what they are in Silicon Valley. The office space is a fraction of what it costs there as well. So you don't need to move your entire operations. You can just move parts of those operations to low-cost centers, which is exactly what had been done for my wife's work. Able to operate on US regulations, but actually from a remote location from Canada. So there's no rules or limits around a lot of these companies, and they will definitely seek low-cost operating environments, which Calgary is definitely one of those.
And we kept on getting deeper and deeper. I'm like, this makes so much sense for us to invest in Calgary, and that's why we've been doing it. So when we looked at the companies that moved away from California to Texas, now again, will they still maintain some sort of presence in California? Absolutely, but there is a shift happening. So HP moving their headquarters from California to Texas, Oracle headquarters from California to Texas, Tesla. Elon Musk has personally moved from California to Texas. Dropbox, the CEO of Dropbox has moved from California to Texas. We're starting to see these companies move, and we're going to see the same thing happen in Calgary. And when I talk about government and their abilities, well, when I look at Alberta, can they invest? Well, Alberta is in a very, very good position to invest because of that backbone I was discussing earlier, oil and gas. Alberta has the lowest net financial debt in Canada. Where in Ontario we're nearly 19,000 per individual of government debt. Alberta is less than 2,500. So will Alberta's net financial debt per capita grow the fastest in Canada? It's going to, yeah. It's going, but that's because they're investing, because they have the ability, they have the capacity to make these investments into their economy, to diversify their economy, because they've been saving all these years with their oil and gas royalties that came from that sector. And again, that sector, that revenue, which has decreased, but will always be a steady stream of revenue coming into the province from oil and gas. Again, a backbone area. And then what you do is you build off that backbone. And that's where we're seeing the diversification to the tech world, where we gave those examples, where you have a tier 1 city that was built in oil and gas, where you have tier 1 office space, AAA office space at rock bottom rental rates, the number 1 best city in North America to live in, the second lowest cost of living environment in Canada. When you look at all these things, it is on the cusp of booming. And when we look at the diversification of the Calgary employment, oil and gas is now only 6.5% mixed in with mining, fishing, and those items. It's a smaller sector of the economy. There is diversification happening in Calgary. And that's where the boom bust comes into play. It's already bust. It already went down. We're not worried about the price of Calgary going down. It's already happened. This is when you want to buy, because we're looking at the economic signs that this is where the growth is going to be. So how do we get into Alberta? How do we get into these markets? Well, we are able to buy with only 5% down. So we buy pre-construction. I don't want to own something there. I don't want the physical asset today. I want a physical asset in the future. So I'm securing an asset for the future. So we buy with Minto with 5% down. The purchase prices on these on these units are anywhere between $200,000 to $400,000, depending on the location. Downtown locations will be closer to 3 to 4. Suburban locations 2 to 3. So if we're looking at deposits on these, we're looking at anywhere between $10 to $20,000. That's it. You always have the ability to assign. Because we're not located in Calgary, what we've negotiated is a 2-year rental guarantee, including full property management. And what that is the builder will lease back the unit from you for the first 2 years. So that's what your rental guarantee is. And there's a calculation for that, which we're going to go over in the next slides. For us in Ontario, again, we have people all across Canada on this webinar. This is massive for us. No development charges or other closing costs in Toronto that can be $20,000 plus. No land transfer tax. Again, in Toronto, that's going to be another $20,000. So it's an extra $40,000 in closing costs that you don't need to worry about. And because there's no provincial sales tax, that's another $24,000 savings where you don't have to deal with HST rebate and extra tax that's on these units that's baked into the price. There is none of that there. So from a closing perspective, it's incredibly attractive for us. And all the units are cash flow positive with the rental guarantee. So I just put together some examples of units that I bought there to show people the rental guarantee. So the unit I bought in Era, that unit ended up being $370,000. When I factor in the rental guarantee of 0.06, and I divide by that 12, my rental guarantee ends up being $1,855. When I factor in my mortgage, property tax, maintenance fee, and what the lease back rent will be of $1,855, my unit will be cash flow positive $265 per month. $265 positive. That's incredible. Can't do that in Toronto. And then my unit at East Hills, which is more the suburban location, my lease back rent on that will be $1,467. When I factor my mortgage, property tax, and maintenance fee, I'll be cash flow positive $218 per month. So again, can't do that in Toronto. And then when I actually look at my capital outlay, so I'm only putting 5% down. So an Era that's under $20,000. So if my property goes up in value by $20,000, I've doubled my initial investment. That's 100% return. I'm expecting to grow more. But why I show this is I don't need a large growth rate on these properties to see a substantial return on my initial investment. East Hills, same thing. My deposit was under $15,000. So if my property goes up $15,000, again, I see over 100% return on my initial investment on these properties. So just small growth leads to big returns on these properties. I'm expecting higher growth in these. I'm holding these a longer term. I'm expecting these properties go up over $100,000 in my time frame of ownership class. So that's where you really got to look at, well, what's my capital outlay? What's my return on what I'm actually putting out there? And will the property be cash flow positive? And check on both these boxes. And when we look at the policy, the pro-investment of that area, so you have no rent control in Calgary or Alberta, no foreign buyer tax, no land transfer tax, no provincial sales tax, no development charges, and the $10 billion stimulus package, including reducing corporate taxes. It is a pro-investment capitalist economy in Alberta. And anything we've touched has sold out. So ERA, the first building, we sold out 180 units in 3 months, starting in November 2019. Annex, which had a special investor release, we sold those 40 units out in the summer of 2020. And then East Hills, the most recent launch, we sold out all 87 units in 2 weeks in November 2020. We're currently on the ERA 2 launch. That launched just a week ago. 40 units in that building, which will be the phase 2 of ERA 1. We just have a few of those left before this building's a sellout. Everyone on this call will get access to those units. We'll send those to them. And then East Hills Crossing phase 2, that one's going to come out in March of this year. There'll be another roughly 87 units coming out. That's more of a suburban location. Pricing on that will be 2 to 3, where the ERA pricing is 3 to 400. ERA being a downtown blue chip location. So that's currently what we're having right now, and all of those will be sellouts. So what we're going to do is we'll open the floor to any questions. If you have a question, you can ask it in the Q&A box down below. Otherwise, there will be a recap sent to everyone of this video that comes out in 24 hours after this live production, and we'll include information on the remaining units at ERA 2, as well as the upcoming launch, which is happening in Southeast Calgary, which is East Hills launch, and that'll be pricing in the 2 to 300s again. 5% down on all these opportunities. It's just a straight 5% down. There's no insurance bond or anything you need. You don't need any of that. And all these have full lease backs from the builder. No rental pools or anything like that. It's a full lease back by the builder. That rent is locked in for the next 2 years. So if you don't have any questions, that email will go out to everyone again in 24 hours. And you'll have the opportunity to book one-on-one calls with us if you have any more questions that you may want to ask us. Thanks everyone for coming on. Kyle, it was great chatting with you. And we'll talk to everyone later. Bye-bye.
Bye, everyone.